Good morning, traders. This is Brian Weber for our technical analysis resource.com. This is the Euro Dollar video report for the 11th of May 2012. Again, Euro Dollar has been pretty much declining on the intraday basis, pretty much from the New York session all the way down through the Asian session. We just found a little bit of support down at the 129.05, which was our target a couple of days back. So price has declined and took out the orders that were sitting there that we were talking about the other day. So 129.05 has been hit. We just had a little bounce there through the Asian session, came back down, just bounced off it again towards the London session open today. We've had a couple of trend lines as well. As you guys can see here that we had a multiple touch trend line here. It actually looked like we were getting a bit of a bounce off of this trend line, but price couldn't sustain the move to the upside. We had the 50 and 100 pure moving average cross right here, just at the daily central pivot. And prices have pretty much just formed another trend line, as we see here off this rejection. Okay, again, we continue to bounce off of that trend line. So I think this is a pretty easy call today. We'll be looking for a break of that 900 level, which is just a couple of pips below the current support. So we've got the support at the 129.05, but we'll be looking for that 12900 level to be broken. I'm not too worried about the DS2. I think that will give way pretty easily. Okay, so I'm looking for a continuation move just to break that 12900 level. And I'm going to advise trading this all the way down towards that 128.60 level, which is a confluence zone of the weekly S1 and the daily S3 level. Okay, so there's a good 50 or 40 or 50 pips to the downside until this confluence zone. Okay, so we're going to sell short today. Just sell an instant break of that 12900 level right there. Okay, don't have to wait for a pullback. Just sell the actual breakout and trade that downwards at 128.60 confluence zone with the weekly S1 and the daily S3. For more downside, we've got the MS2, which is the monthly support to level down at 128.20. Again, that is a possible target if the 128.60 gives way, but we do have the weekly S1 and daily S3 there, so this should cause a little bit of a stumbling block for price if we do get the break down below. Okay, we should see some decent support here again towards the North American session. If we do reach it by then hopefully we should break that level and head down, but do target that 128.60 and probably just cover your shorts there and wait to see what happens in the market. For any upside move, really what we're going to have to see is a break above the central pivot for the bullish bias to come back into the market. Okay, so we got the daily center pivot around this zone here. First of all, we'd have to break this trend line. There's not a lot of pips for maneuverment here to trade up the center pivot, but again, we've got a lot of confluence here with all the swing highs and swing lows really, and therefore this central pivot pretty much is in the middle of all that. So really, if we're going to trade any higher today, we'd have to see a break of that central pivot, come back down, test it as support in order to get long, and then we'd basically be trading it out towards that 129.69 and then possibly the 130 level up here. Okay, obviously that's going to be our main target for any bullish momentum coming in the market, because that's pretty much the strong resistance barrier up there, that 130 level. So once again, to go short in the market today, just trade an instant break of the 12900 level right here. Okay, and we're going to short that down towards the WS1 and the daily S3 level down at the 128.60, 128.67 support confluence zone down here. Alright, and for our buy signals today, really again, just to confirm, we have to really see a break above the central pivot, hold it as support, and we'll be trading that up towards that 129.69. And then further up, we got the 130 100 level. Okay, so guys, have a good one.